Have you ever gotten into a trade, placed your stop, been stopped out, and then immediately the market turns around and goes in the direction that you thought it was going to go? Stay tuned. We'll talk about that next. Hi traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to talk about maximum market adversity. And what that is where the market will inflict as much pain on the maximum amount of traders possible before it's going to do what it's going to do. Now, if you understand the principle of maximum market adversity, you'll start to really look at the extremes of the market in terms of the auction process and know that somebody has to get trapped in order for the market to be able to facilitate trade in the opposite direction. Now in Forex, one of the big things that a lot of traders talk about, and one of the ways that the markets tend to move very strongly, is that when the banks come into the market during the Asia, the London, Europe, London, and the New York sessions, we will often see strong moves at the beginning of when the banks come into the market. Now, one of the things that's critical about understanding that maximum market adversity is that you need to be prepared to understand that trap traders are the ones usually who are entering into the obvious trades. So depending on what time frame you're trading on, you're going to need to really start to step back and look at how the mechanics of the markets work, have the emotional understanding of how traders get trapped, and how you're going to be able to position yourself into the market, minimizing your risk, but at the same time, hopefully maximizing your gain and having a mechanical process to actually plan, execute, and manage that trading process, and at the same time, have your stop loss in place to manage that downside immediately upon entering a trade to account for maximum market adversity. Because if you're trading during the day, when these markets move, they will move very fast once a certain amount of traders are trapped, and it's usually towards the high or the low of where the market is accumulating positions and getting ready to move into the opposite direction. Very rarely do you get very strong trending days. So, maybe one day a week you'll get a really strong trending day, but that accumulation or distribution process possibly then has occurred over a couple of days. Now this is why it's important to understand monitoring the highs and lows of each day or each week and looking for these areas where the market has gone out of balance and then lost its momentum to continue moving in that direction. Once the market has facilitated trade and starts to run out of volume, it will look to move in the opposite direction. So maximum market adversity is where the market will move and trap as many traders possible, inflicting as much pain as possible before it moves into the opposite direction. This is a really important thing. Brent Penfold talks about it in his book, The Universal Principles of Successful Trading. A lot of other traders have talked about it, but it's a critical understanding in terms of knowing where to position yourself using limit orders, but also at the same time knowing where to manage the downside in terms of limiting your risk. So once the market is taking that position in and you're in the trade, the next step is being able to manage that properly. Now I talk about this in my 7-step daily routine for high performance traders. Accelerating your learning is a critical. One of the things about using short time frame charts is that it can accelerate your learning. Now I'm not suggesting to trade necessarily in short time frames. I do use an hourly system and I use an end-of-day system, and that is largely based off of the larger weekly trends or ranges. So use that. Go to my homepage, get the 7-step daily routine for high performance traders. It's about journaling, getting into a daily process to establish your levels, ritualizing your approach to the market, planning your day, managing your trades, and then reviewing and monitoring how you were able to perform during the live market, or even at the end of the day sessions. How accurate were your levels? Was your analysis of the market correct? And again, goal setting, vision, physical nutrition and exercise, all the things that will help to build you in a positive direction and allow you to focus on the direction of constant progress. So remember, maximum market adversity. There's going to be, the market will inflict the maximum amount of pain on as many traders as possible in order to do what it needs to do. Hopefully you found some value out of this video today, traders. If you like it, please share it on Facebook. Again, I appreciate the comments and feedback. Stay disciplined, stay focused. Didn't say it was easy, but I did say it was worth it. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.